Hi guys, welcome to my YouTube channel. My name is Fimonia Prince. Today I'll be sharing insight on the current economic condition and what you need to know as an investor. This is what Jim Rogers has to say.
Pessimism around right now. Usually, when there's this much pessimism, something happens to cause a big rally. And the rally is big because everybody's pessimistic. I mean, for instance, if we had peace in Ukraine, the market would go through the roof for a while. And I hope that's when I would start shorting in a much bigger way. My plan is that if we have a last rally, a blow off rally, that I'll be smart enough to short it. In my view, things are changing in agriculture, and there may be great opportunities. But do not, if you don't know what a tractor is, don't go invest in agriculture. If you never heard of soybeans, please don't invest in agriculture unless you learn what you're doing. In the 1970s, the United States was still a creditor nation as a whole. Now we are the largest debtor nation in the history of the world. So there are more differences. And the debt is, I mean, look out the window, Jordan. The debt is staggering all over the world, not just in the US. What they're doing in Japan is mind-boggling. It's so absurd. But that's happening many places. So it's going to be bad. We're going to have bear markets, whether we like it or not. I know there are some people who say, you're just trying to scare us. No, I'm not. I'm telling you the facts of history. We've always had bear markets, and we always will have bear markets. And one should know that. If you don't know that, probably you should not be investing, and you should be prepared. That's all I'm suggesting. You can watch Jordan and get prepared for what's coming. And if you're prepared, you will probably do well, or you'll certainly survive, and you might even make a lot of money. I don't like the fact that we're going to have a horrible bear market, but I have to be prepared or I'll get wiped out too. Well, the Japanese market today is still down about 40%. I'd have to look up exactly from its all-time high. You were right. I mean, it's been a nightmare in Japan. The Japanese market made its high in 1990. That's not a typo, 32 years ago. Now, there are not many markets in the world that you can say that about. My gosh, it's been down for 32 years. But that's the case in Japan. These things can happen and do happen. And when we have big bear markets, a lot of people get hurt. When you look at historic bear markets, let's say agriculture, agriculture didn't just go down for 4 years and then have a big bull market, or many things. Japan, for instance, the point is that the real bear market, you may have big rallies, an industry or a company may go down for 4 or 5 years and have a big rally, but then it usually has a retest, and it takes years to wipe out or clean out the excess capacity in most industries or the lack of demand. And then you can have a long, when I call a bull market is something where you can just buy it and put it away and go to the beach, where you don't have to worry about it. That's what I meant by serious bear markets, and that they last a long time.
Right.
Not all of them, of course. I mean, Amazon didn't stay down for 10 or 15 years when it collapsed long ago, but many things usually do. America built up a lot of debt. America also had huge assets saved up because of the Depression and because of the war. We had huge savings in the system at household level, even government level. There were huge savings that people could then deploy, even though there was a lot of huge government debt. And there was a lot of excess capacity because of the war, because of the Depression, and because of the war. People couldn't be using excess capacity to build cars or TV, radios, or whatever it was. So there are differences. That debt was huge, but it was offset by very large savings that had been built up during the Depression and during the Second World War. And so after the war, people could start spending their savings, and there was enough capacity, excess capacity in the system, that there wasn't a huge amount of inflation. So we had an ideal period. I mean, nobody likes to think of the war, but after the war, it was somewhat ideal since we won the war. But even the countries that lost the war, they too had opportunities. So war often leads to great opportunities. My advice would be no, wait until you've done a lot more homework, and then you decide that you want to start with an index fund. Don't listen to some guy unless you know what an index fund is and how they work and why that might be a wise decision. Don't do that. Just wait.
Right.
Jordan, there are going to be many, many investment opportunities. Anybody who's 25 or even 55, there are going to be many investment opportunities in their lifetime. Don't hurry. Be patient.
Right.
The best thing I will tell you is something that I've said before is just wait until you see some money over there in the corner lying on the floor. All you got to do is go over there and pick it up.
Oh,
that's how you get rich. Just wait. Wait till you see something that you think anyway is going to be a sure thing. And when you see the sure thing, because you know what you're doing, then invest. If you want to be a successful investor, stay with what you know. Don't listen to me, Trish. Stay away from hot tips. Never, ever follow a hot tip. And I will say that to many people. I say, ignore hot tips. And they will say, okay, we understand. Just give me one hot tip. Just one. Just one. Everybody wants to be rich this week. I do too. But please, my first advice is stay far away from hot tips, no matter from where they come. But if you want to be successful, Trish, just stay with what you know. Everybody watching this or reading this knows a lot about something, whether it's cars or fashion or sports or something. So that's where you start, because you already know more than most people. You certainly know more than I do about most things, because that's what you love. When you go to a doctor's office, those are the magazines you read. Or when you go online, those are the websites you visit. So you already know a lot more about something than I do. And you know more about whatever it is than most people in the world. So stay there, and when you see something happening in the field that you love and know a lot about, something that you know is going to work, be successful, then do some research, find the companies. Are they smart people? Do they have too much debt? There are many things you can look up about that company. But then, since you know more about it than most of us, if you decide it's going to be successful, then you make an investment. That's how you become successful and rich. And people will say, but that's boring. Okay, Trish, you want to be rich? You want to be successful? Be boring. Be boring and stay with what you know. And don't be following people like maybe you can follow Jordan, but don't follow me and most other people in the investment world, because you will go broke unless, if I told you something, Trish, now I'm going to give you the long version. If I told you something in which to invest and you did it and it went up, you wouldn't know what to do. You don't know why you bought it. If it went down, you wouldn't know what to do. You'd blame it on me. You'd say, that Jim Rogers doesn't know anything. He told me to buy X and it went down. But the point is, you wouldn't know what to do because you don't know why you bought it in the first place. So please stay with what you know, and you will be extremely successful, and you will be very, very rich someday if you want to be successful. And if you love investing, you obviously love something because that's your passion. Well, follow that, and that will lead you to successful investing.
So guys, it is important that you understand whatever you're investing in, make sure you do your own research before doing any investment. For more insight, please like and subscribe for more upcoming videos. Thank you.